The CFA Society East Africa has today emphasized the urgent need for increased capital mobilization if Uganda is to realize its ambitious economic goal of growing from a USD 50 billion to USD 500 billion economy. This call was made during the 2025 Alternative Investment Conference held at Sheraton Hotel in Kampala under the theme Unlocking Capital for Uganda's Economic Transformation. The conference has brought together local and international investors, policymakers, financial institutions, and development experts to discuss alternative investment strategies such as private equity, venture capital, infrastructure finance, and digital asset development, all aimed at catalyzing inclusive and sustainable growth.
Based on my recognition that there is a competition for capital across Africa. The bigger countries like South Africa, Mauritius are already well organized, but we have seen recently Kenya and Rwanda reorganizing themselves to attract more capital to their countries.
According to data from the Uganda Bureau of Statistics and the Bank of Uganda, the country's GDP for financial year 2023-2024 stands at USD 50 billion, with public debt reaching 96 trillion shillings, approximately 48.2% of GDP, unemployment rate of 9.2%, a tax to GDP ratio of 13.5%, and insurance penetration remaining below 1%. These indicators highlight both the challenges and opportunities for Uganda to redefine its investment landscape and attract long-term capital that fuels infrastructure, innovation, and job creation. Alan Tabe, Director of Investments at the Deposit Protection Fund, has expressed concern that Uganda continues to lag into the continental competition for investment. That is why this conference was organized to spotlight Uganda as an attractive investment destination and bring attention to the economic potential.
Uganda was being left behind, and I felt at the time that it was important for us to also to be better organized to attract foreign capital to come and support our visions. But I'm happy as we have come into the third year of this conference that the president has set a new goal for us as a country to grow from 53 billion as at 2024 to about 530 billion by 2040. It's a very ambitious goal that the president has set, but now it has to be broken down into smaller pieces and implemented. And it's people like us who are stewards of money in the country that need to also guide on what we are going to do on our small part to support the big vision.
He has also emphasized that Uganda already has untapped local funds within its financial institutions and pension schemes, but these need to be channeled into productive sectors.
We believe that creating new companies is one of the most pressing decisions that we must take today. We need to create almost 3 to 4 million new jobs that right now will require the creation of 1,000 new companies. And to make these companies survive, we need to be able to finance them. We need to be able to identify where the money that is going to grow these companies is going to come from. And this is one of the purposes of this conference, to have these conversations, because we need to have Ugandan solutions to Ugandan problems.
Rob Langrick, Chief Product Advocate at the CFA Institute, presented findings from a recent report revealing that only 1.4% of capital raised in Uganda is generated locally, highlighting a significant funding gap.
And the really key finding was that when you look at the amount of money that's being invested into private equity and venture capital across those 10 regions, you realize that it's only about 1.4% of the total money raised globally in private equity. You compare that to the fact there's 3% of GDP in Africa and 19% of the population. So we think it's punching a bit below its weight. And when you consider that the young people are all moving to the cities across Africa, you realize there's an infrastructure funding gap that needs to be filled.
Langrick has advocated for stronger public-private collaboration, supportive regulation, and increased awareness among local investors to widen participation.
The problem is that governments have had their borrowing triple since 2010. So they have limited capacity to spend money on infrastructure in the cities. So the governments need to have the private sector step in. Now the good news is that the private markets have boomed really in the last 10, 20 years.
Dixon Sembuya, Head of Research at the Capital Markets Authority of Uganda, has pointed out to digital transformation as a key enabler for broader investment inclusion, highlighting the development of digital assets and platforms will make it possible for ordinary Ugandans to access investment opportunities easily, even with small capital.
And financial services, we all know that once you automate, once you digitalize, there are numerous benefits in as far as financial services are concerned. So you're able to increase access, you're able to increase convenience, you're able to lower the costs.
He has also indicated that the Capital Markets Authority is working on policies to promote digital investment tools, fintech innovation, and secure asset markets that empower youth and small-scale investors.
Of course, once you enhance protection, once there's a framework for oversight, then you're going to drive confidence. And this type of products, digital assets, will then gain traction. But the key thing is ensuring that we have a regulatory framework, to ensure that there's a structured approach in as far as trading and investing in digital assets is concerned.
As Uganda sets its sights on $500 billion economy, experts agree that sustainable development will depend on innovative financing models, strategic partnerships, and an investment-ready policy environment that inspires confidence among both foreign and local investors. Naomi Namsoke for NS.